Hello, everyone. Welcome to November's market update. It's Katie and Daniel here from On the Block Realty. Welcome.
Hello.
So we want to go through some high-level observations, some statistics from the Toronto Regional from the Toronto Regional Real Estate Board. So this is basically your overview comparing November to last month, which is October. And we'll go into some detail now.
Cool. All right, so let's start with prices, the thing everybody's curious about. What's happening with prices? And you might remember in our October report, prices month over month were actually up barely, but up a little bit, where it was showing a bit of a flat line in terms of the prices versus September of 2022. Well, now they are going down month over month. In almost every sector, you can see here there's a slight increase in detached homes, but generally across the board, prices are going down in greater than a 1% month over month range, 1% overall. And also, as we talked about last month, you can see when you look at last year, month over month prices went up October to November last year. So what that's doing is it's increasing how much the drop has been year over year. When you compare November of 2022 to November of 2021, you can see that prices are down over 7% versus last month when it was only 5.7%. And that trend's going to continue because prices were continuing to go up quite a bit this time of year, all the way through the late winter, early spring of 2022, meaning that even if prices stay flat month over month now, that comparative number to last year is going to get bigger and bigger. So you're going to see a lot of that in the media where that 7.2% will probably get into double digits, would be my guess, once we get to January, February. December is a little bit of an anomaly everywhere because people don't do as much transacting in real estate around the holidays, but definitely that doesn't come as a surprise that that number is getting bigger as far as the drop versus last year.
Yeah. And when they talk about we're down 20 or 30% from the peak in February, that's kind of what we're building up to, that come February or March. I would imagine that would be the expectation
Right.
once we get to that point.
Yeah. And I mean, it's easy at any time to say, like, well, when you compare to the highest or lowest point in the last number of months or years, you're going to find the biggest gap possible.
Yeah.
So there is, it's not that anyone's, I think, over dramatizing it, but definitely it's something that we can foresee this. I don't know that prices are going to be starting to rise in any useful way in the foreseeable future with interest rates the way they are. So even if we can maintain some sort of a flat line that's plus or minus a percent month over month, like we're seeing, that's not going to change the fact that it was skyrocketing a year ago at the same time.
Right. Okay, next we have home sales, which we saw in November was very similar to October. We're 49% less than this time last year, so November 2021. So every single segment is down, from the detached all the way up to, or all the way down, I guess, to the condo market. And down below, you can see versus October of this past year, we're also down in terms of the number of sales. Detached is down 10.6%, semis 13.5%, townhouses 5.8%, and condos are also down 3.7%. Now, some of that is obviously some seasonality built in. We typically find each year, October is a more active sales month than November, but still the overall message is that the sales are down. There's not as many people, not as many buyers out there scooping up these homes.
Yeah. And you're right. Like the seasonality is the big difference month over month. Some of that can be, I guess, shown like last month, it was also 49% lower than the year before. So like year over year, even though we're down a lot month over month, it was the same thing. It went from 9,700 to 8,900 last year. So we're just dealing with much smaller numbers to start with, and they are also seasonally reducing. So even though there's a lot less supply and a lot less going on out there, there's still as like a correlated amount of less activity happening alongside of that, which is in line with this time of year historically as well. So speaking of new listings, this also factors in a certain element of seasonality. You can see year over year, both October and this year are down year over year by the same percentage to the decimal. So there is an expectation typically that this time of year there might be less new listings coming on the market. It's possible snow is starting to fall, things like that. People aren't getting ready for school. There's no real dates that people are looking to scoop up a house on when it comes to November, December. But the same trend rings true in terms of how much new listings are down month over month, which is again seasonal, but we're starting from lower numbers. And as you saw in the last slide, it doesn't mean people are jumping in there, even though people are in the market. There's only about half of the properties on the market that are actually being scooped up, which we'll talk about later. So it's not as concerning that we're down month over month when you look at it as compared to the trends for this time of year, but we are still down in new listings across the board and down considerably in the actual sales as well. So you're seeing a lot of red and red arrows down, I think, with the exception of just that month over month difference in detached prices, which was up very marginally. There's not a lot of green in the month of November, which isn't that surprising with a lot of the financial news that's coming out there and interest rates and all that stuff as well.
Okay, and then looking at days on market, as we've said in previous videos, there's two measures that the Toronto Regional Real Estate Board measures, and that's listing days on market and property days on market. And property days on market is the more important measurement because that's the total amount that a listing is on the market for versus listing days on market. A home could be relisted with a new pricing strategy. And so it just accounts for that one specific listing. So we can see here from November versus last month, we're up by a day on property days on market. So it was 20 in October, and now we're up to 21. And the same rings true for listing days on market. We went from 14 and now we're up to 15 total.
And that's important because those are year to date overall, those ones there, which really shows you that the trend for the year is getting bigger. Yeah, so the year to date difference is definitely up there. That's what you're talking about, that overall numbers and properties are taking longer on the market overall for the whole year, which breaks down definitely on a monthly basis where the numbers are even higher. When you look at all TREB areas, it's become what has year to date been 21 days on market. Just in the last 2 months, we've been up to 33 days on market for properties. And the average listing days on market is going up overall as well from 21 to 22. So not a ton of difference month over month, but definitely properties now are generally on the market and available for greater than a month when it used to be less than 2/3 of that, which basically just means they're sitting a little bit longer and giving people more of an opportunity to shop around, which it does seem like people are taking their time to do.
Yeah, I mean, and there's definitely certain markets that seem to have some big differences. Like I'm just looking at Halton Hills this month versus last month. It was 35 listing days on market and 56 property days on market in November, whereas in October it was just 20 and 37. So that's a significant difference, whereas others are pretty much showing similar trends. So it's just interesting how certain markets are so different. And maybe it's just one or two particular sales. It might have skewed the results. So maybe don't look too much into it unless you're kind of diving into that actual market a little bit more, but just something to keep in mind.
It's interesting though, because that example, same number of sales in each month. So it's, it's things are moving, but at a much, much slower pace in terms of how long they sit. So there might be more supply that waits longer for people because the same number sold just took almost double the time. So it's really going to be interesting to keep an eye on regions and to see where trends are starting to take hold in different ways. Like you said, though, yeah, I mean, considering the difference in volume in areas like Toronto has 1,900 sales versus 1,800, where that's a much
Mhm.
bigger sample size to take the average from, but it's relevant
Yeah.
everywhere. I think when you get away from a couple of regions that are under 10 transactions, it's important to
Mhm.
take a look at how long. And I think the smaller the area, it's possible the longer these days on market are going to be um,
Yeah.
overall. So,
Mhm.
okay, so sales to new listings ratio. I don't know if we talked about this much in our last report, but we wanted to throw this in here. And this gives an idea of basically what it sounds like is for every new listing that enters the market in a given month, how many properties have sold overall. And that's giving you an idea basically of how much inventory is still out there. So if 100 properties are new in the market and 50 sell, that effectively means 50 more homes are added to supply carried into the next month. And that's important in a market where supply is the biggest issue. Obviously, prices and demand are being impacted by other factors now, like interest rates, which is definitely putting a big hit on people's ability to purchase and the prices they're able to offer. Um, but supply is a really important thing. And you can see here when we look at these bigger numbers on the bottom of each month, the top here is November, the bottom is October. The sales to new listing ratio a year ago was close to 90%. And it did get, I think, even higher than this once you get into the early months of this year, which basically means that when a property hits the market, it's almost certain that it's going to disappear very quickly. There's not a lot of new listings that remain on the market. And that has now dropped to 50% or so, which, depending on perspective, it's an opportunity, it's a concern. It really depends on what side of the fence you're on. But I wanted to
Mhm.
add this chart here, thanks to a Toronto Realty blog, shout out, that shows the trend of what this ratio has looked like over the last 10 years. And it really paints a picture of the fact that 50 to 60, 65% is actually more of a healthy ratio to have to allow for inventory to be on the market and to have things feeling a little bit more balanced.
And
It's
that's,
only
yeah. Sorry, I was just going to jump in. 40 to 60% is generally the balanced average. So yeah, within that range.
right. And I mean the GTA, I guess, has never really experienced much under 50. I mean, we were
Mhm.
there in October, and maybe we'll go
Yeah.
back there as we go forward, the way that some of these days on market are looking. Some of that has to do still with, like we've talked about in past months, about pricing strategies and expectations of sellers still coming to a place where they're accepting that we're not getting the prices that we were getting at the highest point in the market. As those expectations come back down to earth, you're going to see these numbers go up a little bit more in terms of the sales to new listings. You're going to see average prices probably um, maybe even increase as buyers and sellers come together in a more suitable way and things aren't just sitting for longer, but properties days on market will also go down a bit as well. We're not there yet, and interest rate hikes continue to kind of hinder that process because with an interest rate hike, there's a little bit of a lag where everybody starts to figure out what they can afford and what sellers are willing to take. And once that has come together, if another interest rate hike comes, it kind of restarts the process all over again. So we did just see another one of those of 50 basis points. So it won't be surprising if we see a lot of these numbers stay low for the foreseeable future still.
Yeah. Yeah. But I
So
mean, maybe more sellers are coming to their senses with the pricing and, things are getting a little bit more active or typical or, a little bit better than October. And I think personally, we've seen that for ourselves where homes that are priced well, presented well, are still, doing pretty well in terms of days on market, in terms of getting sold relatively quickly, given that this month's market conditions.
yeah, there's lots of sales happening still. It's just selective consumers now who have the ability to go after the stuff they really want. They're still spending money, sellers are still making good money, but it's those listings that are presented properly, priced properly,
Mhm.
that are getting deals done. And that is really what's reflective of the action that is happening in the market right now. People still
Right.
need places to live, and people are still moving in and out of the city. So it's an opportunity for people who do it right to take advantage of that and really cut through the noise, where those who are still following that, well, if I just put it on the market, it'll sell mantra, are not going to have the same amount of luck.
Right. Yeah.
All
Yeah.
right.
So hopefully that was helpful for everybody. Feel free to reach out if you do have any questions, and definitely keep your clients updated on all of these market stats. And if you want to get a little bit more granular and specific with their particular area, we'd highly recommend it, because there's definitely a lot of questions people have right now about what's going on in the market, whether even if they're not looking to actually transact right now, they do like to know what's going on. So we would advise that you reach out to all your clients. It's a great opportunity to do that. And
Bingo.
we'll see you next month.
All right. Take
Take
care.
care. Bye.